SPY is just basically up on a little 45-degree angle last few days. Jobs number was a bit weaker than expected, around 150,000 jobs. I haven't looked at a chart of the monthly numbers over the last couple of years, but it does seem like that trend is starting to get a little bit lower, and it makes sense. In order to grow that jobs number now, you have to bring more people back into the workforce, right? Because we're already down to 4% unemployment, and for a number of years, those numbers were averaging up around 200,000, less workers available. Wages really have to tick up to pull more people back into the workforce. So it would make sense that those numbers would start to average a little bit lower. So we'll see if that trend starts. But meanwhile, the market's doing its own thing, doesn't really seem to care at this point. Here's the look. SPY's moved up, had the 1 day of weakness here, moved sideways for a week. There's some end of the year selling. People thought there might, I guess, be some tax gain selling delayed at the beginning of the year. These people were wrong. People are just buying. And we're overdone, so we're starting to get overdone. So the question is, can we get a little bit more sideways action now? Have another down move after some consolidation. You kind of see the pattern of sideways, up, some down action, up, down action, move up to the next area. You get a couple of down days in there, but no follow through. The thing that we haven't mentioned in a while, those of you who are newer, is as we move higher and then we get a day of weakness, we want to see if that day of weakness leads to anything else. It's been a long time since it has. And so until it does change, the modus operandi needs to be intraday. If we fail at a resistance level that's been established in the prior few days, or we get below a support level that's established in the prior few days, we look for intraday sell pressure. We've seen pretty solid, strong intraday downtrends in the market overall in the middle of this strong run. But what we haven't seen is multi-day follow through. And until you see that, your mindset shouldn't be, don't be the person who says, oh, I'm going to catch the top. We've had a few of those guys on the desk in the last 4 or 5 years. And they're all gone because we're in the middle of a secular bull market, which I started talking about in 2012, 2013. In the secular bull market, people who stay short on a higher time frame eventually get eliminated. And so we're in this uptrend. We got a nice collapse of oil from $100 down to 26 gave us about 18 months of sideways, or maybe it was 2 years. Let's see how long this was. Basically gave us this up and down range for a while before we broke out the end of 2016, and we kind of resumed this prior trend that we've been seeing in 2012 and 13. So that's kind of where we are now. So without some large exogenous event that was readily identifiable, and again, oil went from, I don't remember where it was, $90, $100, something like that, went down to below $30. When it finally stabilized back in the 50 area, it gave us the ability to kind of break out again here. So oil's at 60, by the way, now. So this trend has resumed. It's even lower volatility than we saw back here in 2013. I think I talked about that in yesterday's morning meeting. But short term, it is starting to get extended. We've come off about 30 cents from the pre-market highs now. I did short a little bit after that unemployment number. I covered right here. So yesterday's resistance was 272. High was 272.15. If we start holding above 272.5 again, we'll look pre-market high is 272.75. Failure at pre-market high gets down below 50 cents. We'd look for a pullback into the 272 to 271.70 area. When it closes below that, we'll see what happens tomorrow. But right now, even though we set in a resistance level, we're still 80 cents above yesterday's close. IWM sold off hard right from the open yesterday, from 55 to 54. 54 had been our prior kind of resistance area. We're looking to see if we could close above there. We did. We're trying for about a week and a half to do that. We closed above. And so next thing I want to look for is, can we get a close above 154.75, 154, 154.80. If we sell again today and we close below 154, that catches my attention a little bit. All right, so the in-place stuff isn't particularly good. We'll go through it. Not good because they're just thinner stocks. So the second day plays might actually end up being better. And I thought all of these second day stocks, we're going to talk about the three of them, all offered pretty good opportunity yesterday. So the first in play thing is SONC. Normally trades about 800,000 shares a day. It is, I didn't even put any notes in there, did I? They beat their earnings, so that's why it's gapping up. Earnings beat. So coming into earnings, it was actually sold a little bit first. So that's good news for us in terms of, well, it ran up, let's say, from 24 to 28, moved sideways for a couple of weeks. They sold it a little bit into earnings. Numbers are good, and it gaps above. So clearly the first thing we want to do is see if it can hold above 28.5 here. And this one had a big run from 2012-13. It had been down at $8. A few times tested the low 20s. Kind of reminds me of Shake a little bit. Had the big run, then tested the low 30s before running up. It's really kind of like 30. And then below that, it gapped from 32. So 29, tested the 50 cents here a couple of times. That's what I'm going to look for right on the open. What does it do here against 28.50 resistance from the last couple of weeks? Does that act as support? If it flushes below, be careful to not be involved other than on the short side until it comes in closer to $28. But ultimately, if it can hold above 28.50 and then take out 29, I'd be looking for a play up to $29.80 to $30. Next one is HAIN, H-A-I-N. I was skeptical of this when the takeover chatter started. I think it was New York Post that was reporting it, which never really seems to be right on these things. Now New York Post came out with a story and said they can't find a buyer. So it did have a huge run up. And then things weren't so good for it. I guess the growth decelerated and it got cut in half. Moved back up on takeover rumors. I think, and this is probably Whole Foods getting taken out by. Actually, it wasn't. This is probably like Whole Foods getting taken over here. And then they started the rumors again. They're going to get taken over. And apparently, they can't find a buyer. So it's been trading in this area right here. And below 38, there's really not much. This one normally trades 1.2 million shares a day, so I would hope we could do at least 2-3 million shares today. I guess my thought is first thing I would do is watch a pop, see if it gets here close up to this 40 area, sputters out around here. If not, I want to see what it does. Is there a lot of selling here when the market opens at 39? And if it even holds here, I'm okay with playing it down to 38 to see how it does there. And then we'll see from 38. And if it shows a lot of weakness and a lot of selling pressure and cracks 38 right on the open and doesn't have a big bounce from there pretty quickly in the first 15, 20 minutes, then I'd start to think about the next support area, which was 30, 36. RGNX, they updated their pipeline. Market doesn't seem to like that, although it's come back a bit here. said use 30 as the inflection. It just did have a big run up. If we look at the trend from the last couple of weeks, 32, people really would be motivated maybe to sell 33. That's my thought was look for the bounce to 30, 32. Little volume came in here above 29.5. Net on 50,000 shares. So if it's holding above 30, happy to play to for move to 32. If they flush it on the open, want to see if it comes in closer to 29 and then gets back above 29.50. And hold here, and hold here. Roku. Okay, so Roku caught the downgrade from Morgan Stanley yesterday. We had the 50-50 level. It bounced off of that in the morning. Pretty good, about $2. But then the sellers started to take a little bit of control here. Made a little bit of a lower high. Was steady down to, didn't quite get to 50-50 again though. So people stepped in front, and it just moved sideways. It catches a second downgrade today from an analyst who was completely wrong about the stock. Kind of jumped on the Morgan Stanley bandwagon, I think. The analyst had a prior at a 27 target on it when it ran from 25 to 60. They raised their target $1 and then lowered it to a sell. So let's take a quick look at the 30 minutes, see if we can look for how this could potentially bounce today. So first of all, we had a strong breakout here above 48.5. So below that, 46.5. What do I have for support on there? So I did 46.5. So I'm pretty confident that if they flushed it on the open down into this area here and you bought it, at a minimum you could catch a move back up to 48 here. I've had times where I've bought this thing at the lows and I'll sell into this and then I'll sell some more into this and then it really goes all the way back up. So the real play is if you buy it here is look to hold some all the way back up to 50-50. See what it does here if prior support becomes resistance. So that's my thought that. If it doesn't flush right there in the open and pops up for $50 and they're selling here, you can play it on the short side for a rollover again. Tesla. So Tesla was pretty wild. Right on the open, it spiked up. I was actually not in the office and had all sorts of tech issues. So even though I was shorting it at pretty good prices up here around 314, my system went down and I didn't catch this like $8 down move. But then it held the pre-market support and even had a better up move, taking out 316 briefly. It basically went up to the prior day's close, and then sellers came in, pretty happy with the gap fill. Made a higher low, didn't quite get to 312. And this morning looks kind of strong. So to me, I'd still be leaning long on this. And I'd really have to see some closes below 310 to start to believe it could retest that 302 area. 320. 324. It's kind of the next big resistance. It'd be nice actually if it started to move sideways between like 315, 320 for a few days, then we could catch the next breakout from consolidation. But the one strong reminder from yesterday morning was, and I watched some people trade this and really get ripped up, is you really need to know your prices. If you're shorting on the open, you want to short it into this where it broke down the prior day, 315 and change. And if you're getting long, you want to do it 308, kind of 306, the pre-market support, this area here. If you're shorting into this area here where it's supporting the pre-market, you can get caught in this and get crushed. If you're getting long on the breakout above 315, you you're in the money for a minute, but then you might have trouble getting out and get caught this. So you want to really kind of just use the prior days kind of areas of congestion, the prior few days, and understand you don't want to be caught in the wrong direction on the extremes on this one, because very quickly you'll be $2-3 out of the money. And then LB, I thought this one was pretty good. Before I left the desk, I did say there was a 49.60 buyer. Now that buyer dropped. So let's see what it did when the buyer dropped there. And you can see it very clearly on the 5-minute chart. They were just accumulating it there. And so what happens quite often in these situations is you'll get one more down move. Now, they started buying at a quarter then. So you don't have to buy with them here, but once it kind of gets back up above that 60-cent level, buying against the low of the day for move up to here, at least for move to 50-50 is a pretty good play. And then if it gets above there, you can think about this move back to, I don't remember where I got flatted, maybe like in here somewhere. It did top out 51.80 and then pulled into and did a retest to 51. So this is a really clean bounce in terms of, once it got back above the low here, it held above $50, then it held above 50.50, held 51, it did a retest to 51. This is pretty clean. So looking at it this morning, a quick flush down into 50.50 to 50.70, something like that. That would be interesting to me, nibbling. I mean, ultimately, you'd want to probably buy it on a flush to 50, but you get some here. And if it gets back above 51.50, play it for move to yesterday's high. That's it. As I said, the in-play stuff wasn't particularly great. You should keep an eye on it, though. But certainly Roku, Tesla, and LB were all, I thought, pretty good yesterday. So you want to look at those again strongly.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.